All right, guys, welcome back to another Teachable Moment. Today is Friday, September 16th. It's about 11 in the morning. Got a lot of stuff going on this morning. And guys, one of the things that I want to take a look at here before I start is the dollar. You can see that the dollar, since 9 o'clock this morning, has had a really big sell-off in the last 2 hours or so. And what that has led to is us coming back and kind of testing this basing area. On the back end, I believe this is the CPI number that spiked the dollar. It sent all of the currencies way down. And we are coming back for the third retest on this area. And what I notice here is that as we are creating lower lows in price, we're creating basically equal highs on the indicator. So not a lot of directional momentum that the indicators are giving us other than this kind of support area that's been created around 109.20. Now, if this support area holds, what I'd be doing, and guys, a rollover just occurred, so you got to go to the contract, especially a couple days afterwards, or else you're going to get bad data, is on the euro, you have this drop-based, rally-based drop, nice fall away, never tested that level. We came back into it at the same exact time that the dollar is coming into its support area. And if we go to mrci.com/special/coral.php, we can see that the dollar and the euro, which is right here, have a negative 94 correlation on that. So if the dollar is going to go up, the euro is going to go down. And I like to use this on every single currency trade that I take, because you can see that the euro is coming down. Now, I don't have time for our elite traders to get this type of trade in because of the spike in price. But if I go back to MRCI, we can also see that that's the euro dollar. I'm sorry. I was going to say the euro is 99. The euro dollar is 94. The Japanese yen is 97. And the British pound is 99. So if we look at the Japanese yen and the British pound, they should look pretty similar to a fall in price as it's hitting. But what we have to do is who's got the best level, right? So this is kind of the area right here. Drop base, drop. It doesn't even create a new low. This is not a great area at all. I don't know if I would even get, I wouldn't get short here. And it's tested it several times here. Kind of looks more like the dollar, right? Kind of looks like it's testing this high as the dollar is testing its low right here for the 1, 2, 3, 4th time. So we don't have the divergence here on the dollar and on the yen, which again, guys, because rollover just occurred, you got to go to the actual contract. What we want to look for is the euro showing us any signs of divergence or anything like that? And the answer is no. As we approach this level, we have higher highs on the indicator. So that's not going to work. And that's basically what we've got here on the Japanese yen. So not sure exactly what's going to happen with the with the yen right now. The euro looks to be working out the best for us. And as I go to the British pound, which I'm just going to change this to 6BZ22, is that running into a level that we can trade against here? And the answer to that is no, it's not. So the only one that we have a potential trade on here, as the dollar continues to fall and check itself on that support level, is this area here on the euro. And this is exactly what happened. It is coming down. I have no idea what's going to happen. This is definitely not the best area on the dollar. So take a snapshot here of the euro, and then when you go back to the dollar, it's not the best area of demand. This is literal definition of support. And we don't trade support. We could get a bounce up from here, but if I was going to take a trade, if I had to choose between the dollar and shorting the euro, I would be short the euro. Again, this is what the continuous contract looks like, guys. So if you go to 22, you come back here and you have the rally-based drop on the actual contract. All right, so that's the difference there. We rolled over like 1 or 2 days ago. So you just got to be aware. Either way, I don't know if it's the best trade out there right now. Don't think it is, but this is what we look for when we're trading currencies, is looking for where the dollar is at, and I don't trade Forex, but it's a lot of similarities when you're looking at what the dollar is doing versus what the futures contract of any of the other currency pairs are doing. So, sorry, any of the other currencies are doing. It does have a rally-based drop with proper follow-through, but some indecision here. We are above 60 on the RSI, so lots of bullish pressure. We're unlikely to make a new low down here, but that's still a very long ways away, right? So what I like to do is, if I was going to take this trade and get this to you guys in time, is I would like to take my first target at, if not the most recent low, the one after that. So probably about right here is where T1 would be, and then T2 would be here, and then you're below parity. So that takes you out to a larger time frame, and maybe down here around these lows around 995 or something like that. So just food for thought on how to use the dollar and the currencies when we're looking at potential trades. So guys, another teachable moment on how we use this here for our elite traders. I'm sorry I couldn't get this in time for you guys because it happened very, very quickly. But yeah, this is exactly what I look at for the dollar and all of the currencies. All right, guys, take it easy.